Hello there, this is James and you're watching Tixee Live. In fact, you're watching a Tixee Live watch-along of the Canadian CPI. Now, before we get into today's little watch-along, don't forget these little videos are for educational purposes only and in no way whatsoever should ever be treated as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out the way, let's get started. So today's watch along is of Canada's CPI, okay, or otherwise called Consumer Price Index. Now, for those individuals, those new traders who are just starting out, I'll explain what the Consumer Price Index is and why it's important to the market. Now, Consumer Price Index measures the change in price of a basket of goods, okay, seeing if it's increased in price for the consumer. If you get a high Consumer Price Index, okay, the central bank of that country, in this case, the Bank of Canada, will watch it very, very closely, and that will help them in their decision for interest rates. Okay, because the higher the inflation number, okay, or the higher or the increase in inflation, the one way a central bank can fight inflation is by raising interest rates. So this is closely watched by the market because a higher than anticipated number, okay, is potentially can make that currency stronger because the market then sort of assumes that the central bank will look at this and may increase interest rates. A lower percentage of number, okay, is considered negative, potentially negative for the currency because the central bank may look at it and go, okay, interest rates are, inflation is not that high, we don't need to raise interest rates. In that case, it could then potentially weaken the currency. Okay, now there is two different types of CPI which we'll be focusing on. Okay, the Consumer Price Index year on year, which is the change in a price of goods, including energies and food, okay, year on year, and the expectation of that is to come in at 7.4%. Okay, and the other one we'll focus on a lot, of course, will be core Consumer Price Index year on year. The expectation for that is 5.9%. Okay, now the difference between the core CPI and the CPI year on year is this core. So the CPI year on year includes oil, energies, food, tobacco, things of that nature, things which can have extremely volatile price. The core, on the other hand, doesn't include these things. They include other baskets of goods. So not oil, not tobacco, not food, etc. So it focuses on a different thing. So it cuts that out. So anyway, there is obviously two more CPIs which are coming out at the same time, which is CPI month on month, expectation 0.1%, and core CPI month on month change 0.3% is the expectation there. Now, like I say, this indicator or this event can really dictate how the central bank may react in relation to interest rates. And we've seen, obviously, the likes of the Fed and the likes of, obviously, the Bank of England, the Swiss National Bank react over the last couple of weeks. And Canada has raised interest rates a fair bit over the last couple of months. Interest rates for Canada currently stand at 1.50%, 1.50%. And in fact, if you go back to January, interest rates was 0.25%. They then raised interest rates in March to 0.50%, and then again straight away in April to 1%, and again in June to 1.50%. 1.50%. So they've raised interest rates almost 3 meetings on a trot, okay, on the trot. So yeah, they're doing a lot what a lot of the central banks are doing. So like I say, this is why this data, it can be extremely important to the market, especially to the loonie and to the CAD, because there's another reason which I want to have a little chat about, okay, because this could be a big issue. And this is what the market could possibly look at, okay? Because like I said, Canada's raised its interest rates, what, 1, 2, 3, 3 meetings on the trot, 4 meetings on the trot, sorry. And it currently stands at 3 meetings, 1.50%. Now, here's the thing. When you raise interest rates to fight inflation, borrowing costs becomes a lot more expensive, such as loans, think credit cards, things like this, but also mortgages. So this, so I have to ask the question: if interest rates come in higher, how much can the Bank of Canada raise interest rates again? Because the Canadian housing market is really under a lot of pressure. Now, let me just talk a little bit about the housing market. It's Canada's housing market. It sounds like I'm going off tangent, but no, I have a point. I have a reason for it. Now, home sales in, say, Great Vancouver, just as an example, dropped by 32% year on year in May. Okay, year on year in May. And in fact, the matter is, the housing market is very, very big in Canada. In fact, it actually takes up and consumes 37% of investment capital in Canada. So it's a big percentage. So if you think of all the other investment vehicles or the other assets, 30% of investments go into housing. Household debt has increased to around about 185% of disposable income. If we do a comparison now, let me illustrate why this is a thing. Since 2000, the average house price in Canada has more than tripled. Compare that to the US in the same time frame. House prices have increased by 60%. It's tripled in Canada, gone up 60% in the US. Another large property market, obviously, is the UK. Home ownership in the UK is currently at 65% in 2022, whereas home ownership in the US is currently at 65.5% in 2022. You compare that to Canada, the estimation of home ownership in Canada as of 2022 is 70.6%. So it's a huge housing market in Canada. So where am I going here? Why am I talking about housing market when it's to do with CPI and interest rates? Well, look, again, I haven't asked the question. If we get a higher than anticipated CPI, how can the Bank of Canada fight it by increasing interest rates when there is so much jeopardy with the home housing market in Canada? How can they do that? Because it's such a fragile market, and you have so many people currently now in Canada struggling at 1.50. So this is why this is going to be quite interesting to look at, because it is about the housing market in Canada, and I feel this story has got legs with more things to come about it. So anyway, that's enough about that. We're getting close to the announcement now. Let me pull up my chart. We have 12 seconds. Now, this is the dollar CAD, okay? Currently trading at 1.2980. Okay, 1.2980. Okay, this is on a 4-hour chart. So you have seen that, over the last good couple of trading sessions, really from June, you have seen dollar strength against the loonie. So I'm saying, if this number comes in higher than expected, in theory, the loonie or the CAD should get stronger. But I think then the market will ask, what can the Bank of Canada do to fight inflation? If the number comes in weaker than expected, then obviously we might see more dollar strength as well. But again, down the line, that will potentially maybe continue because this housing market issue in Canada. Anyway, I'm too busy talking about this. Let me get the announcement up. It's about to happen now. I've got my trusty phone, as always. So let's have a look. Getting ready for it. Okay, it should be coming out any second now. Let's change the time frame so we can see any reaction. Okay, so say, okay, loonie is Okay, hang on. Right. Okay. Right. No, not yet. Come on. Get ready. We see any action? Any action on the loonie at the moment? Nothing at the moment. Let's have a look. Get ready. Let's have a look. Okay, yes, we've got it. It's come out. Right. Price index, core, 6.1%. That's year on year. What else have we got here? Consumer price index, year on year, 7.7%. So both extremely higher than anticipated, a lot higher than anticipated. So yeah, breaking news on this. So we have year on year, higher than expected at 7.7%. Expectation was 7.4%, so higher than anticipated. Then we have core CPI year on year, also higher than expected at 6.1%, 6.1% versus 5.9%. Initial market reaction as it stands, as we can see a slightly weaker Canadian dollar against the US dollar. Will that stay that case? Will that stay the case? I don't know. I think the market might digest this. We're going to have a look at how this comes out and how the market looks at it. It could be like I was saying earlier, maybe, just maybe, the market's looking at this and looking at how high the inflation is, because that is a lot higher, 7.7 opposed to 7.4, a lot higher than anticipated. So maybe the market's looking at this as well and going, okay, that's high inflation. The Bank of Canada can't do no more on interest rates because of the housing market. So that might be also what the market is thinking. But I mean, obviously, we're going to have to wait and give the market a bit of time to digest this. And we'll have a look again in a little while. So there we go. Higher than expected across the board. All CPIs higher than expected. So yeah, that is quite that's quite shocking, actually. That's quite a high number for Canada. Definitely. So bear in mind, what was the last one? Year on year, 6.8. That's 6.8 in April, year on year. So now 7.7. April, 5.7. Now 6.1. So yeah. So yes. Yeah. Shocking. Okay. Well, don't forget, you can ask me questions anytime I'm on live. I'm live, of course. I will now be going live again in about 45 minutes time. Let's see how the market has digest this information in the safe. Like I say, 45 minutes time, I'll go live again for the US session. We'll do a recap on what's just happened and see how the markets digest it. Are we going to see a bit of loony strength because of that high CPI number? Or are we going to see loony weakness purely because the market thinks the Bank of Canada can do no more because of the housing market? We'll just have to see. But anyway, join me at about 1:20. I'll be going live again. Please come along to that one. We'll cover a lot more about what's happened, but we'll also, at the same time, have a look about the US session and how the Jerome Powell's testimony is going with Congress and how the market's reacting to that. So anyway, remember, if you're watching me on Facebook and you like it, by all means, give me a follow. If you're watching me on YouTube and you like it and you want to, give us a subscribe. Hit the notification button so you know next time I'm going live. And if you've enjoyed this little watch along, this program's found it useful, give me one of those. It will certainly make me smile. But anyway, till next time, which will be 1:20 UTC. So in just 45 minutes time, or just under 45 minutes time. Till then, remember, these little videos are for educational purposes only, and in no way whatsoever should ever be treated as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.